In Vietnam, housing prices are continuously rising. House prices have been climbing rapidly, outpacing workers' incomes. Even financial and banking employees, those in the highest paid sectors, cannot keep up with the pace. Among 20 economic sectors surveyed by the General Statistics Office for average incomes from 2010 to the present, workers in finance, banking, and insurance have held the lead for 10 years, specifically in 2010-2011 and 2013-2020. Their income increased from $208 in 2010 to $500 in 2023. According to financial reports from major commercial banks such as Vietcombank and Agribank, the average monthly income from salaries and bonuses for bank employees rose from $900 in 2014 to $1,500 in 2023, marking an annual increase of 6 to 7%. Bank employees are consistently in one of the highest income groups, with monthly earnings averaging between $1,000 and $1,500, confirmed by Ms. Nguyen Thu Trang, Brand Director of Manpower Group Vietnam, a company specializing in recruitment and human resource consulting. Despite high wages compared to the general level, over the past 10 years, income growth for banking employees has not kept pace with housing prices. According to data from Savills Vietnam, the average primary price of A, B, and C class apartments increased by 16%, 13%, and 11% annually between 2014 and 2023. Prices were flat from 2015 to 2017, but sharp increases since then have widened the gap between income and housing prices. For instance, in 2014, the average monthly income of banking finance employees, the highest paid group, equaled the price of 0.7 square meters of a B-class apartment or 1.05 square meters of a C-class apartment. By 2023, this income could only buy 0.5 square meters of a B-class apartment and 0.72 square meters of a C-class apartment. Even though citizens' incomes have risen, owning a home remains challenging as prices increase significantly faster. According to the Labour and Employment Report from the General Statistics Office, the average income of a Vietnamese worker rose from $200 per month in 2014 to $350 in 2022, a 7% annual increase, half the rate of primary apartment price growth. By the third quarter, with an average monthly income of $330, it is estimated that a household with 2 working adults would need to devote their entire income for 21 to 23 years to purchase a 55 to 60 square meter apartment, assuming prices do not increase further. If they save 50% of their income after living expenses, the years required would double. Data from Numbeo, a global cost of living platform, shows that Vietnam's house price to income ratio reached 22.8 points in mid-2024, among the highest in Southeast Asia. This figure is nearly 3 times that of Malaysia and significantly higher than developed countries like Japan, Singapore, and South Korea. The higher the house price to income ratio, the harder it becomes to own a home. Since 2014, Vietnam's house price to income ratio has risen by 27% from 17.8 points, clearly illustrating the disparity between income growth and house prices. Additionally, Vietnamese people's ability to pay for loans is very low, at only 0.4 points, lower than most Southeast Asian countries, except for the Philippines. This issue is more severe in major cities. Ho Chi Minh City's house price to income ratio reached 32.4 points, 1.4 times the national average. Meanwhile, the loan affordability is only 0.3 points, highlighting the difficulty in accessing housing. In Hanoi, the house price to income ratio is lower than the national average at 20.6 points, but remains among the highest in Asia. Housing prices rising much faster than wage growth will quickly escalate income inequality, noted Dr. Le Kien Quong from the University of Banking, Ho Chi Minh City, in his 2021 study, The Real Estate Market and Income Inequality in Vietnam, Status and Policy Implications. He explained that some households are increasingly losing the ability to own a home in the future as they must use their savings for rent. Ms. Giang Huynh, director of the research department at Savills Vietnam, also argued that if housing prices continue to rise faster than incomes, the wealth gap will widen further. People with below-average incomes will struggle to access housing, potentially causing serious consequences for market stability and society. Professor Dang Hong Vo, former Deputy Minister of Natural Resources and Environment, warned that rising housing prices, far exceeding wage income, not only add pressure to social welfare, but also fuel real estate speculation. Speculative money often lies dormant, waiting for prices to rise, not going into productive business, negatively impacting inflation and currency value. Failing to curb speculation and asymmetry between housing segments has inevitably led the current real estate market to a dead end, he remarked. Furthermore, Mr. Vo pointed out that the real estate market plays an important role in business production and the macroeconomy. Market instability would negatively affect the entire economy, as seen in recent years. In reality, the issue of affordable housing is a challenge not only for Vietnam but also for many major cities worldwide, which are under pressure from increasing housing demand due to immigration. Ms. Giang Huyen stated that in Ho Chi Minh City and Hanoi, supply has not kept up with demand. Part of the reason is legal bottlenecks in project approvals, delaying the introduction of new supply. Additionally, rising land and construction costs are also pushing up home prices. According to a report from the Ho Chi Minh City Department of Construction, the city's construction price index rose sharply from 103 points in 2020 to 123 points in 2023, based on a 2015 baseline. Rising input costs have led developers to set higher selling prices to ensure project profitability. Looking at data from 2018 onwards, Dr. Din The Hien also observed that the gap between income and apartment prices has been widening. He attributed this partly to the supply-demand disparity between high-end and affordable market segments. New offerings often do meet actual housing needs, as luxury apartments occupy a large proportion. Additionally, many buyers are investors seeking profit who continuously push prices higher. He also suggested that the chaos in the real estate market is partly due to lax management by some localities, especially in the southern region, which is the country's largest real estate market. According to Professor Dang Hong Vo, real estate tax reform is essential to stabilize the market. A second property tax, for example, could help eliminate inflated prices caused by speculation. One key solution for achieving this is upgrading data management infrastructure to make the real estate market more transparent. This requires a specific roadmap and multi-dimensional research for successful implementation, Professor Vo emphasized. Dr. Din The Hien shared this view, stating that enhancing transparency in management and implementing new laws through decrees is essential to stabilizing the market. In the short term, the critical issue is to resolve legal barriers for projects to increase the new supply soon.